Good evening, everybody. It's me, the Boss Hog, and today I wanted to look at a UK listed company called Fevertree and ask whether they are just a tonic. Alright, so who are Fevertree? This is a company that's relatively new, started in 2005. I actually remember first encountering them when I was at uni, doing a fair amount of drinking, and just loved the product straight away, basically. I like gin and tonic, and in my opinion, Fevertree is just better than other tonics. It came to market because the guys that founded it recognised that there wasn't a particularly good premium mixer for gin, arguably, but actually gin was going through something of a renaissance at the time, a bit of a rehabilitation. It used to be called Mother's Ruin, just because sons, husbands, etc. used to get addicted to it. It was seen as basically poor man's drink that led to destitution, but following that change and kind of some good gins coming to the market, like craft gins, some good flavors, etc., it needed a good mixer, and that's really where Fevertree came from. Arguably in 2018, Fevertree hit peak gin, as it's called, as it saturated the UK. Gin isn't particularly a global drink compared to things like whiskey or tequila. It has a fairly small global footprint, and it kind of ran out of room to grow effectively. So since then, it's been focusing on other mixers and other markets. So we'll have a look a bit more into that. But that's the growth strategy for Fevertree over the last couple of years. In terms of where it trades on the FTSE AIM, or the alternative investment market, underneath FEVR, or FEVR. It's in the consumer discretionary section. Beverage is alcoholic, even though it doesn't do any alcohol, but the mixers are intended to be mixed with alcohol. Fair enough. Market cap a little over 3 billion there. Now, in terms of revenue, this is kind of what I was touching on in terms of saturating its market. You can kind of see since 2018 it's been pretty flat. Now, in fairness, revenue holding up in 2020 with a lot of pubs, etc., closed down is pretty impressive. But also, if you look at earnings, you can see that that's been at a cost, with the margins going to about 20%. They had been much higher, much closer to 30% just a couple of years ago. So that's some fuel for bears, basically. And likewise, you can see that in the earnings per share as well. It's been going down from 53p in 2018 to 36p in 2020. So potentially not great numbers, really. But again, it depends how much you want to focus on peak gin and also the impact of COVID as well. Definitely not a dividend stock, by the way. This dividend works out about 0.6%. Arguably a dividend growth stock in the future, but so far it hasn't really delivered on its promise as a kind of dividend growth company. And that definitely isn't where the company is focusing either. It sees very much itself as a growth stock still. These numbers are correct, believe it or not. Despite being just a drinks company, these are steep valuations. So current PE of 72 and forward PE for 2021 of 64. So definitely extremely high. In terms of forward EPS here, these are ranges basically from analysts over the next few years, but even on the top end there of 67p in 2023, the current share price would give it a PE ratio of about 45. So even still, if these were met, this is an expensive stock under any condition effectively. Okay, so in terms of my current holding, and I am a reasonable holder of Fevertree, they do sneak into top 10 holding for me. I have 90 shares, and you can see here I started picking them up on the 19th of March. And the reason for this is because they finally look like they might be bordering on affordable. There was a 20% fall in a day, basically, following what the market deemed as disappointing results. I had a look into the results, and honestly, I thought they were pretty okay. Yeah, I mean, it wasn't stellar by any means, but I was really cheered by the fact that I think it was three things. First of all, Fevertree is now the #1 in the UK, having replaced Schweppes as the previous kind of mixer of choice. Secondly, it done a really great job moving to what they call off-trade sales, which basically means retail sales. And thirdly, I was really cheered by the fact that although the UK still makes up a lot of their sales, it's now less than half, and they're doing really well on international growth. So I had a look at it. You know, revenue is solid, I would say, considering. Yeah, earnings definitely took a bit of a hit as they kind of tried to manage stock and tried to manage things, but I thought the stock was okay and a good entry point at 21.5 here. I really wish I'd opened up with more shares, but don't we always wish that with winners? Since then, I've basically been adding periodically to Fevertree. I was actually trying to get to 100 before it went to £25, but definitely didn't make that. And you can see there my last shares were added on the 5th of May, 9 shares at 25.61. I really just picked that number for two reasons. First of all, it gave me 19, that's a round number, and it also made my average price a smidge under 23 quid. So both of those things seem like nice arbitrary round numbers. And yeah, great. And really kind of why I wanted to do this video was because I wasn't really sure myself whether I wanted to invest more in Fevertree. Like I say, I love the product, but it is an expensive stock, and I kind of just wanted to assess whether it was right for me and potentially right for you as well. So this is my current holding as it stands currently. You can see here I'm sitting on a kind of 330 odd pound profit, so not too bad at all. And yeah, should I add more? Is it too expensive? Should I potentially sell if I think it's really expensive? So let's go on. Alright, so let's have a look at the bull case first of all. Start with the most obvious, really. You know, the product is premium, but it's really tasty. This quote here is nicked from Fevertree, and it's, if 3/4 of your drink is the mixer, mix it with the best. You know, that's what they strive to be. They use pretty exotic ingredients, all things considered. And honestly, it is just a tasty drink. As a consumer, I think it's a tasty product, and I'm personally happy to pay for a decent drink to go with my alcohol, basically. So that's the first thing. It's actually a great business. Like, sure, it trades on a hefty PE, but it deserves to, right? Why else would it be trading on that PE? Also, as well, the argument is that the PE is really only that high because both 2020 and 2021 so far are going to be heavily impacted by COVID, and actually a combination of both on-trade and off-trade, so, you know, pubs and retail, are basically bringing down revenue at the moment and also kind of squeezing margins as well. That said, margins are still pretty solid, you know, just shy of 20%, and revenue and earnings will recover. So that's a strong bull case potentially if you believe that argument. The market keeps overreacting to understandable disappointment in the numbers. This was certainly the case in March. I do find the market is quite swingy with this stock. Again, the market at the moment, 2 days ago I think, they updated the market and it had the opposite effect, right? Like off trade was doing really well, American growth was really great, and it just went up like 10% in a day. So the market does tend to have quite big swings of what's actually a fairly large or medium-sized stock at least. So that the market does seem to react either really positively or really negatively. And again here, the argument had at least historically been that there wasn't enough appreciation for the growth in both non-UK sales as well as off-trade sales. So again, an interesting aspect. Off-trade sales have been booming during COVID, and although the company itself does expect that some of that off-trade revenue will disappear effectively once people start going back to pubs again, they're pretty optimistic that a lot of it will actually remain, whereas that isn't going to be the bear case, as we'll see in a second. Earnings are expected to grow by 73% as an analyst average by the end of 2023, so still a pretty high growth stock despite the fact it's at least medium sized now. And actually this is a pretty sexy business which is still fairly small in the scheme of kind of global drink players. There's some hope that somebody like Diageo might come along with a pretty good offer, which I think is what would be required to take this company out, and that kind of is always a possibility. Personally, less bullish myself about that point. I'm not really sure it would fit very neatly with anybody, either from an alcoholic perspective, probably neater than a non-alcoholic perspective. Companies like Coca-Cola and Pepsi have also been mentioned as possible buyers. I'm not sure myself. Like, I don't want to invest in a company on the sole premise that it might be taken out. If I really think I have a great smaller company, surely I want it to be successful in its own right. So, you know, if I wanted shares in Diageo or Coca-Cola, I'd just go and buy them directly. But that is part of a bull case all the same. Alright, so now let's have a look at the bear case. Undoubtedly, it's fucking expensive. In fact, its PE is basically twice industry averages for its peers. So super expensive, no doubt. It is what it is. Even assuming the most optimistic EPS growth, PE would actually be 42 in December 2023 at current prices. Again, still super expensive. Maybe you could start to justify that as the bear argument, but still it's 2 years off, and at the very least, things are ahead of themselves in terms of the share price versus the company performance. Next, it doesn't really have a sufficient moat. You know, not too long ago, Schweppes seemed pretty dominant as the mixer of choice for gins in the UK. What's to stop basically Fevertree 2.0 knocking Fevertree off its perch? Fair enough point. although I kind of do agree with that, I do think the branding of Fevertree is really good. It's pretty much everywhere now. They kind of pride themselves on being in like most of the world's top restaurants, most, you know, like 250 out of 300 of the top bars. They kind of like those accolades and brag about it. There is definitely a kind of badge of honor, I suppose, in sort of selling Fevertree and asking for it and etc. Like it, I think it is a bit harsh to say it doesn't have a sufficient moat. I mean, does any drinks company have a sufficient moat? I'm not sure. So I think this one's a bit harsh, actually. I think Fevertree has established itself, at least in the UK, as a pretty good drink, and you know, and it seems to be doing well internationally as well. There's no guarantee that just because it's been super successful in the UK and with gin, again, maybe the gin was a specific thing, maybe the UK is a specific thing, and actually it's a bit ambitious to think it can be replicated with whiskies, tequilas, etc. And in other markets. I think it's not an unfair thing. British businesses have failed in international markets before. There have been some tentative signs that things are moving in the right direction, moving in a positive direction, basically. But it is still early days, and there is definitely an assumption here that there's only going to be good news internationally and with other mixers. So I think this point is pretty valid. It's just a case of how much worry you want to assign to it, basically. At the moment, basically, Fevertrees is almost double counting revenue streams. There's Fevertrees themselves, maybe not, but sort of bull investors are. So there's this assumption, even within Fevertree, actually, the company, that a lot of the off-trade revenues are going to remain once on-trade revenues start to pick up. And the bears are basically saying, no, that's not the case at all. Like, on-trade is just going to cannibalize all your on-trade, and really they're just like, it's the same pound just being spent in a different place, right? Either at home or the supermarket or in a pub. I'm not really sure which way I feel about this, to be honest with you. I don't even think Fevertree are that confident that they know. I don't think that's too unrealistic. Like, no one has a crystal ball. But I do think Fevertree are potentially going to shoot themselves in the foot if they're over ambitious, seeing as how the market overreacts to any negative news from this company, basically. Like, if it does turn out that, you know, 70% of off-trade revenue ceases once pubs open again, I think the market's going to really punish them. So I think that this is definitely a valid point for me. Like, it's real uncertainty at this time as to what that's going to look like. It could also be much more optimistic, right? Maybe this has now become a beverage that people drink at home as well, in which case there will genuinely be two revenue streams, and if anything, you know, the market needs to recognize that more. But we'll see. This one I think is a bit unfair, but I read about it quite a lot, and it's basically, where are the dividends? Like, if this is meant to be one of those like dividend growth companies, there hasn't really been great dividend growth for the last few years. It did, in fairness, only start paying a dividend, you know, after it had been around for about 11 years. So it started about 6 years ago. But since then, it's been you know, not a growth player in the dividend space at all. Yeah, it does give off a little bit of a dividend, but nothing to get too excited about. That said, you know, it does still pay out about 40% of its earnings as dividends. So to me, I don't think that's too unreasonable. And, you know, actually, I do think that in order for the company to justify its PE, it really needs to be growing. So to me, I don't think this is a particularly fair point for the bear case, basically. But it is something I have read and hear. All right, and just to bring that together in terms of the market consensus, so this is taken from investing.com, and as you can see, there's slightly potential downside of close to 12% at the moment. I would say that in terms of analysts, it's pretty evenly split there. You can see 7 buys, 7 sales, and 4 holds. But even basically, the bears are more bearish than the bulls are bullish, and the people who advocate holding this or are neutral, they've all got prices underneath 26.59 as well. So the market consensus is effectively, you know, there's much more downside potential than there is upside, and that just is what it is effectively as things stand currently. And the market consensus for 12-month price target is about 23.50. So again, pretty far down on what it currently is. This is kind of my blended summary from reading, you know, those 18 analyst one-liners. Effectively, the bulls are like, you know, it's a fine business, but price ahead of itself is a kind of like more of a hold position, I suppose. And then some of the bears are sort of, you know, overrated, and although it's got good margins, it basically never deserves to trade at the price and the multiple it's trading on now. I think those are completely fair points, honestly. Okay. All right, so my conclusion, first of all, I just want to say I think it's a really fine business. It's well run, seemingly. It's still got the original founders on board. It's highly profitable. Yeah, sure, that's been under pressure for some understandable reasons, I think. And also, I mean, the products are delicious. Not just the tonic either, but I mean, I'm almost evangelical about the cola. The cola is so good. It completely transforms whiskey, in my opinion. It's got beautiful vanilla-y taste, and I just think it's a fantastically yummy drink. Ginger ale isn't personally my drink, but people like it. Spiced orange is delicious. Lemonade is delicious. I mean, it's just a yummy product. So, first of all, I think any company that's making a delicious product should be supported. Um, I think there is some credit to be given to the bearish argument about the fact that revenue was flatlining since 2018, and really you can't blame that all on COVID. I think the bulls are far too generous in kind of giving Fevertree a pass. That said, I think maybe Fevertree could have realised a year or two earlier, but have now realised that they can't just permanently rely on the UK market and gin, and they have been pivoting quite aggressively away from the UK and from gin mixers. So, but I think the revenue flatlining is a concern, and the bulls are ignoring it, and the bears are right to flag it, I think. Again, I mean, this is completely fair. It's so expensive. I mean, even when I first entered onto this, the PE ratio was almost 45. Now, I am prepared normally to go up to a PE ratio of about 50 for a really fine business. And a Fevertree is a really fine business. So I kind of bit the bullet and started building a stake because I felt like if I didn't get into Fevertree at that time, I potentially never would. And again, I think it's just a really great company and one that I wanted to be in. So fair enough. But again, it's an expensive company. In fairness to Fevertree, this last year, again, I didn't really understand why the market overreacted or reacted in the way it did in March. I think their financials look really promising. I think they've done a really great job of pivoting away from the UK, and their non-gin mixers are also showing really great growth, especially the Coke, which again is just the best product of the range in my opinion. So I think Fevertree deserve a lot of credit for basically doing exactly as they'd said they'd be doing, and it's almost a bit of a shame because potentially their kind of pivot could be showing in the numbers already, if not for COVID. And because we have COVID, we don't really know what the underlying state of the business looks like. But there has definitely and unquestionably been success in them pivoting away from the UK and away from gin mixers as well. So I guess at the moment, the PE ratio and the price of this stock assumes that Fevertree is going to be hugely successful. And if you believe it will, I think it is a company that is absolutely worth consideration. But for me personally, I think a price of around 25.50 at the moment is about as high as I can realistically go. So for me, I'm not going to be buying any more shares at the current price. I'm basically just going to ride out any profit. Buy on any weakness, absolutely. You know, if this does come under 25.50, I will move capital in my investment portfolio to buy a more serious stake in this, potentially look to double my stake. So yeah, you know, really look to build for the future. But even if it's a quality business, I just don't think right now it's a quality investment effectively. You know, you're going to be waiting for a couple of years, assuming fairly optimistic growth in earnings. And you know, I just think you're going to be missing out on other opportunities in the meantime. I would say for me personally, I'm going to be holding at the current levels, but I would consider selling it if it went above 28 quid. I just think that would be so far ahead of itself, like 4 or 5 years ahead of itself, that would be, for me at least, a good chance to just take some profits and hopefully wait for it to fall back down again. So yeah, that's my conclusion, is effectively this is a quality business. It could be a good investment if you either are a very long-term holder, really believe in the business, maybe you think it's going to grow faster than it's growing, or to buy on any weakness. I think especially if it goes down to like 24 quid, and I mean, if you ever get a chance to buy them at like 22, 21, I think you should buy more than I did to start with, and I certainly would just sort of, you know, throw everything at it at that stage, because I just think it would be crazy undervalued. But I think if it does go underneath 25, it's a good deal, and 25.50 is when I'll start adding again. But right now I have, you know, 90 shares in this, top 10 holding for me at least as it stands, and I will continue to enjoy holding without adding at current price points. All right, I hope that was useful for you. Thank you very much for joining me. I've been the Boss Hog, and good luck with your investments.